Yo, what's up traders? Welcome back to another video. Today, I'm going to explain the reference line and how it affects my bias of the day, how it affects my trades. So, we shall look at a couple of examples, but first things first. When I talk about the reference line, I mean the initial balance. So, according to Mind Over Markets, the initial balance is usually the first hour after the open of the day. So, this blue line here, that is at 5 New York Eastern Standard Time, that is when the day closes. So, the first 1 hour, so I'm in the 15-minute time frame. 1, 2, 3, 4. This is our initial balance. So that high, to me, is my reference point. Alright? So, to simplify, so one thing you should be doing is that once you read something that aligns itself with whatever it is you are doing, you go to the charts and investigate it yourself. So I found that the first 15-minute candle works the same as the first 1 hour, but it's easier because I can know where to put the reference line. If it's bullish, I am putting it at the top. If it's bearish, I'm putting it at the bottom. All right. Now, once we have our reference line, now that is where we are looking. How is the market behaving in reference to the initial balance? As you can see, this market gave us that initial balance, tried to break above it but failed to follow through. If it broke out, this is what I want to see: a breakout, pull back, and then continue going higher like that. That is the breakout. So they failed to break above, but as you can see, they are breaking below. So I know that we are below the reference line. So say it's the London session, and my window is 2 to 5 a.m. and the first hour represents the high and the low of the session. All right. Now, when you look at this market, you see they've broken down. So at the back of your mind, you know that this market is falling. So they will either, you can either wait for the stop hand and continue down. All right. Now, the first hour will guide you. So let's go see what the first hour did. So we have our high of the session in the first hour and our low in the session. Now, with our strategy, we know that we want the first hour, we want the second hour to break above, give us an M pattern and an engulfment. All right. Now, once you understand how the reference line works, now we have a bias. We know we are in a falling market. So there are a couple of setups, but once you look at the market over and over again, you start to see things that are unique to you. So the first hour sets the high and the low of the session. Now we have that pattern. Well, we have our M pattern above. They break structure. They break structure here. they retest, give us the engulfment for the move down. Do you see? Now, yesterday I took this trade actually, and I got in here after the break of this structure. I was in, and in that gap I got in. My take profit was hit by this gap, and it was a nice trade. It was an easy 50 pip stop loss for 100 pip take profit. Now, why did I get into this trade? There is this setup that formed here. You see, guys, you have to go back to the basics and understand the candle formations. Once you know how each candle forms and what it represents, then it won't take long before you connect the dots and see. Once you see them forming in lifetime, you know that there is no more volume here. If it's that word, no more money. They've already collected all the money, so they're not coming back. If you enter that trade, they're not coming back, and if you're in the wrong direction, it's over for you. All right. Now, that is the work of the reference point. Let's look at yesterday, well, or a previous day, and this time we won't be looking at the setups per se, but we'll be looking at how the reference point affects the bias of the day. So we are just going to look at random examples. So let's take an example of this day. Now, as you can see, the market broke down, all right? Then continued breaking down. Now, when in the London session, yes, the London session, we know that the market is falling, and the first hour sets the high and the low of the session. The second hour pins up and goes down. This is a nice, in the 1 minute time frame, once you get a setup above, it's a nice scalp. But they come again, they break above, fail to break out and continue. They come back again. All right, this is a breakout, break back in. Now let's look at a better setup, because there's a reason why having 2 or 3 instruments is advantageous. Now look at this setup. Now there are, please read this book. There are normal days, there are trend days, and once you know how they form and their variations, it's easier for you to interpret the reference line. So the market is oscillating around the market, the reference line. Now, this was in the New York session. They broke out, continued higher. Although this was not a good setup, I usually want to see a market that is very, very clear. It's clearly directional. So say a market like this market here. You can see they failed to break above. We are going down. Came back, retested, went down. Broke out, then failed to continue to follow through. That is in the gap time. They break back in during the New York session. This is a market that is falling. They've broken back in. They failed to follow through. So this is a falling market. Alright? Let's look at this one. The market failed to break below. So we are clearly above the reference line. So in the New York, in the London session, it's going higher. In the New York session, they might come back to retest the line. But once they retest it, boom. If they fail to break out, retest and continue, know that it's going in the opposite direction. Alright? Now, I'll make more videos on the reference line. Don't like making my videos longer than this video already is, but please read Mind Over Markets and test it yourself. All I'm doing is I'm just helping you see what I see in the market. You will not see everything that I see because, well, I have my own reality, you have your own reality. It all comes down to how willing are you to put in the work and effort into understanding how the market works. Anyway, stay disciplined, stay focused. Remember, even if you have a losing trade, that is just a lesson of how not to trade tomorrow. See you in the next video. Peace out.